Hi, I'm Carl from RTS Financial Planning. Now we all know that we pay tax on the income that we earn, but in this video I just want to show you a little way of reclaiming some of that tax back so it's inside your pension or indeed inside your own pocket. Now if you earn less than £45,000 a year, most of your money is being taxed at 20% and you'll be called a basic rate taxpayer. But if you earn above £45,000 and less than £150,000, most of the money between these two levels is taxed at 40%. Now let's see what happens when you put some of that money into a pension. Now usually the money you earn from your employer has been taxed before you put money into your pension. You know, you've had your pay slip, you've seen the tax that's been deducted, and then you've got your net pay, which is the money going into your bank account. Now if you put some of that money from your bank account into a pension, this is what happens. So to keep the numbers really simple, let's say you put £800 into your pension. By the time that money goes into the pension account and you log on online and see it sitting there, it will actually have gone up to £1,000. And what's happened there is that the pension company have gone to the government and reclaimed some of the tax that you've paid on that money at 20%. Now what this is your basic rate tax. So even if you earn less than £45,000 a year or you earn more than £45,000 a year, your pension company will be doing this. They will be getting the 20% tax you paid at basic rate back from the government, and it will top up your pension contribution to £1,000. So a 20% increase straight away, great news. Now here comes the crucial bit. If you earn more than £45,000 a year and therefore are a higher rate taxpayer, effectively the money that you've put into a pension has already been taxed at probably 40%. So although the pension provider's already reclaimed 20% of the tax you've paid, in this scenario £200, what about the other 20% tax you've paid to make it up to 40? You're actually owed another £200 back in this scenario, another 20%. But the problem is the pension provider only reclaims the first 20%. It's down to you to reclaim the additional 20% if you're a higher rate taxpayer. In order to do this, you've got to write to the tax office, the taxman, and you've got to ask for that money back. This second 20% doesn't actually go into your pension, it comes back to you directly into your pocket. Once the tax office believes what you're saying and worked out the numbers, they'll pay you it back into your bank account. Great news. But you must remember to reclaim it. Hundreds and thousands of people do this. They do tax returns each year and they forget to reclaim their higher rate pension tax relief. Please don't be one of these people. So great news, if you're paying into a pension, you can actually reclaim all of the tax that you've paid. So in this particular scenario, a £1,000 pension contribution has only actually cost you £600, because the pension company's reclaimed the first 200 and then you've separately reclaimed a second 200. So not a bad way to get a 40% return on your money. Now there are rules in how much you can put into pensions, and depending on what your employer's putting in as well, so do double check the pension contribution limits. We've got more information on our website, rtsfinancialplanning.co.uk.